Hope everyone's doing well. This is a midweek video. It's not going to be a recap or a look ahead. It's going to be a concept video. The concept is going to be covering a very controversial subject matter, at least amongst traders, whether or not you should be trading indices. Yes or no? Let me put this out there first thing. Indices are the hardest things in the world to trade. They are known for being the absolute hardest instrument in the world to trade. Why people constantly go there thinking that they can do better than the majority is mind-boggling. Brokers already know that if a guy goes and opens up an account and starts trading, whether it be S&P, whether it be Nasdaq, it's not a question of if, it's a matter of when they're going to blow up. I'll repeat what I said in the beginning. I'll say it one more time. Indices are known as the hardest things in the world to trade. Why people want to trade them, I don't know. Whether it be a chat room, whether it be fake funded, whether it be their buddies doing it, whether they see some platform that's showing off indices. People are attracted to indices. It could also be because S&P is constant in everybody's face. You get alerts on your phone all day long. S&P is doing this. S&P is doing that. Dow's this, Dow's that. When you're trading indices, and we've gone over this in a video in the past, at least on the future side, you're not really trading the stock market. You're trading, to a large extent, hedges. Indices, for the most part, are just noise. A lot of it is just noise. So I wanted to just show an example for today. If you look at just the NQ, from basically 11 o'clock or even 10:30 and on, it did nothing. It's just noise. How many people do you think were buying and selling up, down, up, down, up, down, up, down? Now you're going to make the argument, oh, these are 30-minute charts. You can't see anything. You're right. I'm just using a 30-minute chart to prove a point. You have people who will look at 1-minute charts. Let's just go to a 1-minute chart. I'm just using the NQ for this. This is not tradable. I don't care what anyone says. This is not tradable. Why? Because all you're trading here are bid and offer spreads. And really, that's all you're trading. You're trading noise. The computer is going back and forth, up and down. The market's going nowhere. And you think that by hyper scalping, you have an edge. Let me tell you something. You don't have an edge. You're trading noise. And no matter how much you think you're going to be successful in the long term doing this, I want you to close your eyes for a minute and just think. If you're doing this from 9:30 and on, how are you feeling by 11:30 every day? How exhausted are you? Can you think straight? Are you mentally exhausted? Are you physically exhausted? What's the point of this? You have no edge. Zero. And I'm not saying it because I'm trying to tell you that what you're doing is wrong. I'm trying to get you to think differently, to think more along the lines of the way a professional trader approaches markets. They're not sitting here going, okay, I'm going to buy the low over here, or I'm going to sell the top over here and go back and forth all day long in this 30-minute bar. It would be insane. They would get fired. This is just a Nasdaq, but you see, it just flatlined. Look, yesterday you had a little bit of a push, but then again, you're getting a grind, but it basically flatlines. You look, these are 30-minute bars. The 30-minute bars are there just for illustrations, just to show you that there's no trend. It's just a lot of it is noise while it's grinding up or grinding down, whatever it's doing, but it's grinding. You have, for example, this day, which was a trend, which is abnormal for indices. Most days, you know how people make money in indices? They usually hold on to them and they make money over the gaps. There's been studies that show that people who were to buy the SPY at 4 o'clock, and let's say, for example, sell it at 9:30, and that's the SPY ETF, they made more money over years than someone who bought the SPY at 9:30 and sold it at 4 o'clock. Because between 9:30 and 4 o'clock, it's just noise. Most people who are in these instruments are using them for hedges, whether it be existing portfolio positions or however they're doing their strategy. That's outside the scope of this discussion. But really, what we're trying to approach this in is whether or not it even makes sense to be here. Now you're going to say, oh, I've been trading S&P for years and years and years. Okay. Over the course of those years, be honest with yourself. How much money have you made? Realistically, how much money have you made? And has it been easy money or is it very difficult money? Look at this. If you got in this and you're going to say, oh, I shorted, okay, congratulations. You're an amazing guru and you were able to short it and you're always catching bottoms and you're always catching tops and you're amazing. That's not what trading is all about. Trading is not about catching bottoms and catching tops and showing everybody how amazing you are as a trader. That's not what the game is about. The game is about managing risk, being in the right place at the right time in the right instrument. Being in noise, there's no trophy for being in noise. And I'll tell you even better. For those of you that are saying, well, I trade on a 1 minute chart. So I'll ask you a very simple question. What was the actual range today of the S&P from 9:30 to 4 o'clock? What was the range? The answer is it was $35.75. That's what it was. So let's just say, let's round 36 points. If you only made 4 points, 5 points out of that whole thing, you didn't do well. You did terrible. Let's just look quickly at the NQ, just for sake of example, okay? The NQ today, the range was 182.5 points. If you took 20, you think that's a successful day? It moved 182.50, okay? From 9:30 to 4 o'clock from high to low. If you grab 20 points, or let's say you grab 30 points, or let's say you grab 50 points, how many trades did you have to take in order to get that? Because it's all noise. It makes no sense. To be in these things make literally no sense, at least on a day-over-day basis. Once in a while, when they set up correctly, yeah, like they do make sense. Yesterday, it made sense. You would get rewarded because you had a nice push. It was basically trending all day long. But for the most part, look what they do. Yeah, let's just go to S&P because I know a lot of people like to look at the S&P. And the S&P and the Nasdaq, they look the same. Okay, 30-minute bars. Okay, look at this. It's just noise. Up, down, up, down, up, down, up, down, up, down. This is just noise. All this is just noise. Literal noise. So why are you here? This is what I would call hard money. It makes no sense. Like it makes just literally no sense. And when you think about it, you know why you're really there? Because you don't know anybody. You don't know what else is out there. So you click on an advertisement or you watch a YouTube video or a Twitter feed or whatever it is, and they're all telling you about how amazing it is to be in indices all day long. And indices are the greatest things, whether it be S&Ps, NQ, whatever. And it's awesome. And you can make all this money. But the reality is indice traders don't make all that much money. It's really, if you look at, let's say, equity traders, if you think they're trading SPYs and Qs all day long, let me explain something to you. You are gravely mistaken because they're not doing that. They're there when volatility is so heightened that single stock risk becomes a little bit harder. So it's much easier to just be in the SPYs and the Qs. But that's when volatility is exploding and there's news and there's things going on. Outside of that, unless they're doing it as a hedge against overnight positions, they're in positions, whether it be Apple, whether it be NVIDIA, whether it be Amazon, whether it be ExxonMobil, whatever stock that they're in. They're trading stocks. They're not sitting here trading SPYs and Qs. When you're trading ES and NQ, to a large extent, that's what you're doing. You're trading SPYs and Qs. If you are an equity trader, would you think that it behooves you to be in SPYs and Qs every single day trading them? Most days, the indices do nothing. They gap up and they basically flatline because it's an index. So it's a basket. Individually within the basket, you can have things that are moving 100%. And that's how equity traders make money. They might not even be in S&P stocks or Nasdaq stocks. They might be in Russell stocks. They might be in micro caps. They could be in anything. So why are you thinking you could be in an index and an index is going to make you money every single day? Like I said at the beginning, indices were known, and they still are, as the hardest things in the world to trade. They are by far the hardest instrument in the world to trade. By far. And I'm not even talking about in the concepts of breakout trading. I'm just talking about in general, because you get up, down, up, down, up, down, up, down. It's a reversion to the mean type of instrument. That's really what it does. And for the most part, it grinds and it's very, very noisy. So even if we look out at, let's say, a daily chart. So let's just pull a daily chart up of the S&P for a second. Okay? If you look at the ES futures, okay, from 9:30 to 4 o'clock, yes, you're going to say, yes, it's trending and it's doing great. I don't disagree with you. It's trending and it's doing amazing, 100%. But look how it doesn't. It's so choppy and so noisy as it's grinding up. There's no way you could successfully navigate this and make real money trading indices. Let's look at the NQ because that has a little bit more juice to it. Why? Because high beta tech does. Okay. Granted, it's the same picture. Now, again, it's grinding up. I don't disagree with you that it's grinding up. But look how choppy it is. Up, down, up, down, up, down, up, down, up, down. How is this a way to trade? Honestly, that's not trading. That's gambling. That's pure gambling. Trading is a business. Trading is not gambling. Trading is the hardest job in the world. Why people like to do it, I don't know. I still don't know. Why people are attracted to it, I don't know. Maybe it's because they see the flashing lights and they assume that because they see traders have the best life and everything is great. Trading is a grind. Trading is a blue collar job. That's really what it is. And it's a desk job. And there's nothing sexy about it and there's nothing fancy about it. And the guys that are doing very, very well, you'll never hear about them because they don't tell you what they're doing. And they don't tell you how they do on a day-to-day basis. You'll never hear from them. And that's the way it's supposed to be. It's a job like any other, it's a desk job like any other job. But for some reason, it's been over gamified to make it seem as if anybody can do this. It's not for everybody. I'm going to tell you this flat out straight. Forget about indices for a minute. Trading itself is not for everybody. Now, with that being said, if it's not for everybody and it's the hardest job in the world, on top of that, you're going to be trading the hardest things to trade, which the hardest instruments to trade, and you're going to add another third layer on top of that. That to me makes no sense. Zero. There are other things you could be in that would reward you and allow you to actually have peace of mind and to not be sitting on the edge of your seat. Because I'm sure a lot of you do this. You sit on the edge of your seat, palms are sweaty, you're sitting with your hand over the mouse, and whatever you're looking at, whether it be footprint charts, market profile, volume profile, heat maps, whatever it is that you're looking at, and you're trying to make decisions on all of this stuff, and you're getting things that potentially are mixed signals. What do you do here? What do you do there? I have a moving average crossover that's happening, but I have Bollinger Bands that are doing something else. I've got profile that's showing me something else. It gets confusing. And on top of the fact that it gets confusing, all it does is wrap you around in a pretzel for making a decision. And usually what ends up happening is impulse takes over. And the next thing you know, your account is done. And there are people who prey on this. They want you to be involved. They want you to be clicking the button. Why? Because whatever financial gain they have in that, they want you clicking the button because there's a financial incentive for you to be clicking buttons. With that being said, I'm not saying everybody does that because it's not true. It's not true that every single person out there is looking for you to click buttons and just have at it in indices. But you have to ask yourself, if you're trading indices for X amount of months, X amount of years, and you're not having real success, and success is not, I have a fake funded account and I pass it and I get a payout and then the next one I blow. That's not called being successful. Successful means month over month, you're actually making money. At the end of the year, you're making money. There's not to be a lot of money, but that you're making money, you're profitable. And you're net profitable, not gross profitable, net profitable. Then it's a different conversation and you're doing it in indices. But you have to ask yourself, if you were in something else, could you make even more money based off of what you're doing? Now, I'm not telling you that indices are the worst thing in the world. I'm just saying they're the hardest thing. There's way easier things to be in. Like, for example, if you chose today, let's say, for example, you were an equity trader, okay? Or let's say you had the ability to trade equities, okay? So you see what NQ did. Let's look at, let's say, Apple. Just pull up that for a second, okay? Okay, Apple was a little bit of a dud, right? Makes sense, right? Let's look at Microsoft. Okay, look at Microsoft a minute. Okay, 30-minute bars. This looks relatively easy to trade. Let's just pull it up against the S&P. See the S&P, 30-minute bars. Same 30 minutes. Look at this. Now, I'm not saying go and jump into Microsoft. That's not what I'm saying. But you see, it was clean. It was easy. This was easy money today. This is not choppy, sloppy mess like indices are on a normal day. Let's look at another one. Let's look at NVIDIA. Okay. Now, NVIDIA was a little bit choppy and sloppy towards the end of the day, but initially it was a nice clean move. Okay. I mean, again, you're not going to get movements in every single stock every single day. Why? Because stocks need catalysts to move. Let's look at oil. Had a nice clean move today. Very nice and very clean. Easy money. It was easy money today. Just like Microsoft. Just like Microsoft was. Now, I'm not against indices. That's not the purpose. The purpose is not to bash indices because it's an index. It didn't do anything wrong. It didn't do anything wrong to me. It didn't do anything wrong to you. That's not where this is going. This is going more in the concept of getting you to think about what it is that you're actually doing, what you're looking to accomplish. If all you want to do is just mess around and just click buttons all day long, then have at it. Then really, it doesn't mean you could be doing this in anything. But if you're really looking to make a go at this and you're really looking to be successful, you're really trying to figure out why is it that you're not making the money that you want and you're not achieving to become the trader that you want to be, you really need to take a deep dive if you're trading indices as to, am I even in the right thing? Regardless of what you see on YouTube, what you see on Twitter or X or wherever you see anything, it doesn't matter. Most of the time, indices are noise, and people who are pushing it are probably not even doing well themselves, but they figured, okay, I'll get some eyeballs and then no problem. Over here, we like to do real talk for real traders. Why? Because our audience or our group are actually trading and they're not interested in getting their heads handed to them every single day. And they're not interested in having this badge of honor of how I was in indices and they kicked my ass today, or I did amazing today and tomorrow you give it all back and then some. Why is that? Because indices by their nature make you impulsive. By nature, they make you impulsive because they're very impulsive type of instruments. Because again, it's a basket, it's an index. So not understanding why it's moving the way it's moving. And like I said before, for the most part, you could count on one hand how many days a month they actually give you something. Outside of that, it's all noise. I'm going to say like this. If the S&P is moving, okay, and I'm going to just use S&P for a second. If the S&P is moving and the average movement from 9:30 to 4 o'clock in the S&P in futures for the past 30 days was 46, almost 47 handles, 47 points. If you're only getting 5 or 10, you're wasting your time. Look about all the energy you're putting into it. For what? For 5 handles, 10 handles? And for those of you that are trading NQ, okay, let's also do 30 days. Past 30 days, the average range from 9:30 to 4 o'clock is 221 points. If you're grabbing 20, 25 points, you're doing something wrong. I'm not saying that you're not a good trader. What I'm saying is you're doing something wrong. You're not capturing the move. All you're doing is messing around and trying to scalp and hyper scalping. Oh, and you're going to say, well, I'm making money. Look how much effort you're putting in to make it's hard money. And for the days that you make your 10 points or your 20 points, so let's say you trade a one lot of NQ, which none of you should be trading more than that, but let's say you're trading a one lot of NQ. So that's $400, maybe make $500, maybe make $1,000, or you get 50 handles. How much effort do you put into it? And by the way, for those of you that are saying, well, I make $1,400 a day trading S&P, if you're trading that kind of size, you're completely and totally over leveraged, big time, unless you have a massive account with high money in it, where you can sustain hits. You're fooling yourself. You're fooling yourself into thinking that you're better skilled than you really are. And that gives you a false sense of security. So when things go wrong, they go horribly wrong. Now, I'm not trying to convince you not to trade indices. I'm not trying to convince you to trade something else. I'm not trying to convince you that you should trade indices. It's food for thought to understand what it is and to understand that most of it is noise. And I'm telling you right now, this is just a fact. There have been studies, I've seen them. Brokers know when someone's trading indices, they're done. They're not going to make it. They know it because they have the statistics to show indice traders, they don't make it. No matter what anyone wants to tell you, they don't make it. Guys who are there every single day, they don't make it. Plain and simple. And I'm not talking about over a 6 month or a year. I'm talking about years, a career. They do not make it. And if you look back and you go through Market Wizards and you read those books, you see none of those guys were indice traders. They may trade indices from time to time. That's not what they did. I've never heard of, and you can correct me if I'm wrong, but I don't think I've ever heard of a market wizard that was a strict indice trader. You've never heard it. You've seen it in option markets. You've seen it in commodity markets. You've seen it in currency markets. But as a plain index, no, never. There's a reason for it. Like I said, these are the hardest things in the world to trade. It's a basket of stocks. It's not even like you're trading the basket. You're trading an instrument that's a derivative of a mathematical calculation and that's used for hedging. And you're trying to compete with that. And if you're going down to a 1 minute chart, you have no shot there. The best scalper in the world, You can look him up. There's someone who's known for being one of the top scalpers. That game is over. He stopped doing it. You know why? Because with the machine being there, he knew his edge is gone. So he stopped doing it because, well, why put yourself through that and you can't make money? So what's the point in this? And if you're doing this for entertainment, then, there's better ways to be entertained. This is not fun. This is mentally and physically exhausting. Doing the scalping thing, the 1 minute chart thing. I don't even look up 1 minute charts. I'm not even bringing it up here because I don't want to insult your intelligence. It's because it's just noise. It's pure unadulterated noise. So, you know what? I'll do it because I don't want to seem like an out. This is the S&P on a 1 minute chart. Look how noisy this is. You're going to say, oh, I can capture this. I can catch all these moves. Really? You really believe you can capture all these moves in all this noise? Fine. Then you're better than the majority of successful traders out there. I can tell you that right now, because nobody trades on a 1 minute chart. Zero. Nobody trades on a 1 minute chart. And I'm talking about it on the institutional level. Nobody does it. So I hope that this video wasn't too harsh. I apologize if I offended anybody. That wasn't the point. It's really to get you to think and to get you to question what it is that you're doing and where you're being led, and if it's even working. And if it's not working, maybe it's time to change. Albert Einstein has a saying, what's the definition of insanity? Doing the same thing over and over again, expecting a different result. That's what most indice traders do. They come back every day like the mouse looking for the same cheese, and they think that every day it's going to work and there's going to be something to do there. First of all, number one, there's not something to do in indices every day. That's hands down for sure. You get moves in indices, maybe 4 to 5 days tops a month. Maybe you'll get a little bit more, but it's basically 4 to 5 days tops a month. Outside of that, there's no real reason to be there. You're fighting a losing battle. And there's no reason to do it. There's no reason to put yourself through that. And it gets you thinking, maybe I should quit, because you're never going to reach your full potential because you're in the wrong instrument. Potentially, if you're having success with it, then this isn't for you. But if you're really trying to figure out why it is that you're into this trading game, a year, 2 years, 3 years, 4 years, 5 years, and you're not having any success, real success, for the amount of time that you've put in, you have to ask yourself, am I even in the right thing? And what do I need to change in order to get better? Because if you're not growing and you're not learning and you're not moving forward, then the market goes on without you. Thanks for listening. I hope that you got some value out of this. I'll see you in the next one.